Alternative assets. This is a great article that I read by Millennium Trust Company. It came out today. I'm sorry, it came out yesterday. It's titled Time to Talk About Alternative Assets. And this is a great article because they approach the issue of wealth advisors not talking about or offering or recommending alternative assets and self-directed IRAs to their clients. And I see why they do that. I mean, they're not going to make any money off of their clients going off and self-directing their investments on their own because that's basically cutting out the middleman, right? But we're gonna tell you about that stuff because you should cut out the middleman. You should be getting higher returns, and you can do it all on your own without them making money off of you. So I'm glad Millennium Trust released this article because it's a strong talking point that needs to continue to be discussed until wealth advisors start properly educating and talking to their clients about what they should be doing with their money. When advisors discuss potential investments with clients, they often focus on traditional options like stocks, bonds, and mutual funds. As their research shows, however, many high net worth investors are interested in alternative investments such as hedge funds, private equity, real estate, commodities, marketplace lending, and crowdfunding. For example, 63% are moderately or extremely interested in investing in real estate, and 46% report the same level of interest in private equity. But when it comes time to discussing those investments with their broker and advisor, the numbers are significantly lower. Just 25% have discussed residential rental properties, 20% commercial rental properties, 23% real estate investment trusts, and 27% real estate limited partnerships, whereas 38% have discussed private equity. Basically, it's not being talked about much. Even when a client expresses interest in alternatives, wealth advisors aren't talking about it, whether they're dodging it one way or another, or they're just saying, "Hey, I don't advise you look into this for one reason or another." It's not being talked about, and that's scary. You guys should be talking about it, and if your wealth advisor is not going to talk to you about it, then it's probably time you move on from your wealth advisor. Sorry to say. The gap between investor interest in alternative investments and the level of discussion surrounding them presents an opportunity for advisors. Conversations about alternatives have the potential to deepen advisors' dialogue with clients, adding value to the relationship for both parties. If advisors would just, and it's going to have to happen this year because of how strong self-direction is coming out this year. This is going to have to happen. Either your advisor is going to have to embrace self-direction and alternative assets, or they're going to have to start finding new clients. I think that's what's going to start happening here because self-direction is coming out hard, and clients start asking about it. You don't really have a choice. You either need to approach it or you need to figure out a different game as an advisor. It's interesting. One reason advisors may shy away from these discussions is a misconception of alternative investments are too risky or inefficient. In reality, however, these investments can enhance returns and add valuable level of diversification to a portfolio, helping to decrease the impact of volatility and provide additional opportunities for tax-deferred growth potential. These accounts, self-direction, alternatives, especially using real estate, the leverage and the things you can do are just incredible. And to completely just bypass and look over the opportunity you have with it is just it's It's a bad move. It's a really bad move. Real estate and commodities, for example, have a low correlation with other asset classes, which means that they can serve as an important counterweights in portfolios when the stock market is down. Hedge funds and private equity, meanwhile, provide opportunities for substantial growth potential on top of more traditional equities. Just as important for many advisors is the fact that the process of investing in alternatives is becoming easier and more accessible and more widely known. People are talking about it like we're talking about it right now. A new wave of investment platforms is providing straightforward access to alternative asset classes, allowing advisors to bypass the complicated paperwork that deterred some from making the leap into alternatives. For example, advisors can now access vehicles such as private equity, which were once only available to large institutional investors. So, it's becoming a lot easier. One example is SDIRA.org. This is our site. You can go there and you can browse all the available investments that are available to self-directed investors. There was never anything like that. This is the first. It's the first of its kind. If you want to invest in alternatives, you have a self-directed account. Even if you don't have a self-directed account, you can go to that site and you can get one. It's as easy as clicking a few buttons, picking a custodian, picking an investment that you want to invest in, and that's it. And within a week, you're turning cash flow. You've got an investment in your portfolio. It can't be much easier than that. It can't. And that's what we're doing here. This is cool stuff. This is really cool. Some advisors and individual investors may be unaware that the alternative investments can play a role in tax-advantaged retirement accounts like IRAs and 401ks. Millennium Trust research shows that even investors who own alternatives in brokerage accounts or other vehicles tend not to own them in qualified accounts. They don't even own them in the right accounts they're supposed to get all of those advantages. Man, there's so much education that needs to be done here. People need to understand how this works. With so much wealth being transferred to millennials over the next several years, now is the time to commit to alternative investments. Younger investors seem more comfortable with alternatives than previous generations, so ignoring them in favor of more traditional assets may limit advisors' abilities to serve their clients in the future. Advisors are going to have to switch it up, or they're going to go out of business. So alternative asset investing is the wave of the future. It's coming in hard here in 2018. That's what SDIRA Live is all about. That's what we're here talking about. If you have any more questions, feel free to shoot me an email. john@johnkopp.org. Also, go to SDIRA.org. This is the SDIRA marketplace where you can view listings of custodians and self-directed attorneys and asset providers, and you can view available investments to put in your SDIRA. It's pretty cool. So, well, that is it. Alternative asset investing. Are you ready for it? 2018, that's the year for it. That's the year for it, guys. All right. This was fun. Same place, same time. Here again tomorrow. Let's talk more SDIRA, self-direction. All right, guys. Have a good one, and we'll see you again tomorrow.